Ladies and gentlemen, good day and welcome to the Southwest Pinnacle Exploration Limited Q4 FY2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone telephones. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Southwest Pinnacle Exploration Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ending 2026. Before we begin, a quick cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Vikas Jain, Managing Director and Chairman, and Mr. Piyush Jain, Joint Managing Director. Without any delay, I request Mr. Piyush Jain to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi, and good evening to everyone, and a very warm welcome to all of you for joining our earnings conference call. It's a pleasure to connect with you all today and share how Southwest Pinnacle Exploration Limited has been progressing. As some of you may be new to our company, I would like to begin with a brief overview about the company, then move to our financial performance for the quarter 4 of the year under review. Southwest Pinnacle is one of India's leading private exploration and drilling service providers, offering end-to-end integrated solutions across a broad spectrum of services, including coal and non-coal mineral exploration, aquifer mapping, coal bed methane exploration and production, 2D and 3D seismic exploration using passive seismic tomography, underground drilling, and coal business operations. Over the last 19 years, we have built a strong track record of operational excellence, having successfully completed more than 165 projects across India and select international markets as well. We currently operate a fleet of 40 advanced drilling rigs, supported by a team of geoscientists and specialized geophysical and logging equipment. We have drilled over 32 lakh meters without a single lost time injury, a record that reflects our strong focus on safety and disciplined execution. Our marquee clientele includes Reliance Industries, Vedanta, Oil India, ONGC, CMPDI, CGWB, Hindustan Copper, and Hindalco, among others. We are currently executing 19 ongoing projects across various regions in India. Further, exploration activities at our coal block in Jharkhand are progressing at full scale. During the year, we were also notified as an accredited prospecting agency by the Ministry of Coal, Government of India, for carrying out prospecting operations related to coal and lignite operations, further strengthening our presence in the mining and exploration segment. Lastly, on the international front, we continue to strengthen our presence in Oman through our joint ventures. Our first JV with Alara Resources Limited continues to perform well, while exploration activities have also commenced at the newly awarded mining block under our second JV in Oman. With this, I would like to now request our CMD, Mr. Vikas Jain, to take you through the operational highlights for the period.
Yeah, thank you, Piyush, and good evening, everyone. Let me first brief you on our financial performance for the fourth quarter and financial year ended 2026, followed by which I will provide you some of the key operational highlights for this period under review as well. I am pleased to share that FY2026 was a landmark year for the company, wherein we achieved our highest ever annual performance. Further, Q4 FY26 also marked our best ever quarterly performance in terms of profitability, reflecting strong execution and operational momentum. The operating revenue for the fourth quarter stood at around INR 78 crores, representing a 5% increase year-on-year. EBITDA stood at approximately INR 20 crores, reflecting a growth of 32% year-on-year, while the EBITDA margin was around 26.25%. Profit after tax for the quarter stood at INR 13 crores compared to INR 10 crores in Q4 FY25, representing a strong growth of 30% on a year-on-year basis. For the full financial year 2026, the operating revenue was INR 243 crores, which is an increase of 35% year-on-year. The EBITDA stood at INR 58 crores, an increase of 74% year-on-year, translating into an EBITDA margin of 23.99%. The net profit after tax grew almost 101% year-on-year to INR 33 crores, with a PAT margin of 13.58%. It is pertinent to mention here that this performance is despite dynamic and often challenging business environment. During this challenging time, we have expanded our footprint, strengthened client relationship, and enhanced our capability across multiple domains of mineral exploration and drilling. The strong performance was driven by consistent project execution, operational efficiency, and a diversified order mix during the year. During the quarter, we also secured our largest ever single order worth over INR 300 crores from Hindustan Zinc Limited. Currently, we are executing 19 ongoing projects across multiple regions and exploration domains. The quality of our order book also has improved significantly, with over two-thirds of the orders coming from private sector clients, resulting in stronger cash flows and improved working capital efficiency. Today, the importance of mineral exploration cannot be undermined. In a world shaped by increasing geopolitical uncertainties, supply chain disruptions, and global race for critical minerals, countries are reevaluating their resources strategies. India, with its growing economic ambitions and infrastructure needs, must ensure reliable access to natural resources that power industries, energy transition, and technological advancement. Exploration is the foundation of this strategy. Without robust and scientific exploration, there can be no sustainable mining, no resource security, and no long-term industrial growth. Our work directly supports this national priority, helping identify new reserves, improve resource estimation, and reduce dependence on import. Over the past year, we have invested significantly in modern technologies, advanced geophysical techniques, and data-driven exploration methods. We've also focused on strengthening our talent pool, ensuring that our team remains at the cutting edge of innovation and execution excellence. In line with our growth strategy, we operated across the highest number of exploration domains during the year, with a presence across 6 active domains, while also expanding our geographic footprint across 8 states in India. We also maintain an impeccable safety record with 0 injuries across all operations during the year. We were also notified as an accredited prospecting agency by the Ministry of Coal to carry out exploration activity in coal and lignite. Currently, our development in coal block in Jharkhand is in full swing. The drilling is about to complete, and once it is completed, we shall be preparing our geological report and thereby mining plan. The overseas operations in Oman, our third business stream, is also going on well. As Piyush said, we have 2 joint ventures in Oman. In the first, we are executing a mining services contract, which is an 11-year contract, and along with we have 4 rigs, which is currently booked for next 2 years. In the second JV, we have been allocated a mineral block spread across 1,400 square kilometers, having minerals like silver, gold, copper, basalt, and chromite. Exploration is going on, and we shall keep you updated. Further, improving our long-term international growth strategy, we have made a strategic investment in an Australian-listed company with a primary interest in Oman. All in all, our 3 verticals of our business are going on well and smoothly, with increased impetus on the government on exploration and energy security. We expect to be on excellent growth trajectory and are confident of achieving around 20% growth year-on-year in short to medium term with substantial increase in bottom line. Lastly, our return ratios have also improved significantly during the year, with return on equity improving from 10 to 16%, while return on capital employed increased from 16 to 23%, reflecting improved profitability and efficient capital utilization. We remain focused on expanding our capabilities, maintaining execution excellence, and creating sustainable value for all our stakeholders. With this, I conclude my opening remarks. We are now open to the floor for question and answer session.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star followed by 1 on their touchtone telephones. If you wish to withdraw yourself from the question queue, you may enter star and 2. Participants are requested to please use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the queue assembles. The first question is from the line of Maitri Shah from Satya Capital. Please go ahead.
Yeah, hello, am I audible?
Yeah.
Yes.
Yeah, hello, good evening. Congratulations on the great result. A few questions. Firstly, on the Hindustan Zinc order that we received, close to 300 crores, what sort of execution timeline do we have on that?
Yeah, while we are speaking, the execution is underway and we should be starting the operation anytime now.
Mm-hmm.
And this contract is for 4 years.
Okay, 4 years, okay. So do we expect the execution to happen quite linearly, like 25% of the order to be kind of added to our revenues year on year? Is that what the expectation is?
No, the client wants us to do it as soon as possible, but the time period given to us is 4 years. So we shall try to do it within the time frame.
Okay, that is great. And the margins on this order, how are they? Like, are we getting orders on a much better or higher margins going from now? How do you see the scenario on the margin shaping up?
Exploration sector and all, as I've said during my opening statement, that the exploration sector is going on well. There is a huge shortage of resources currently in the market, so the margins are great right now.
Okay. Any quantification on what range of margins are you seeing right now in the market?
See, we can't give you quantification as such because we don't work on project-to-project basis as far as margins are concerned. Mm-hmm. So the margins are great, as I've told you.
Yeah, no worries. Okay, and the total order book, we have close to 580 crores. Again, on the timelines, how do you see this order being executed over how long of a period?
See, the contracts ranges from 3 months to 4 years. The largest contract we have right now is from Hindustan Zinc, which will be ending in 4-year time. So this is an ever-going thing. So we keep on adding contracts and we keep on working at the site. So yeah, and all the contracts which we have received are almost on the verge of execution right now.
Okay. Barring the Hindustan contract, the rest of the 280 million sort of order book, what timeline do you have on that, if you could say?
Yeah, so these contracts, they all range from 3 months to long-term basis. Like, some contracts are for 6 months, 1 year. So there is no particular time frame for each contract. These are all governed by contracts to contracts.
Okay, that is
good. The idea is to keep the resources engaged at site.
Okay. Also the 5 rigs
I'm sorry to interrupt, ma'am. Could you return to the question queue, please?
Yes, sure. Yeah.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, you alluded to in your opening comments that we can expect 20% revenue growth and a disproportionate increase in profitability for FY26. So if you could just quantify that from the 24% EBITDA margin last year, what in your mind are you aiming for? What kind of EBITDA margin should we expect?
See, as you can see our past track record, like if you see financial year 25, you will see that, if you compare it with financial year 26, a growth of 35% revenue has given us a profit, almost double the profit, 101%. So when we say that we grow by 20% year-on-year basis, there would be substantial increase in profitability in the bottom line. And EBITDA should also increase because once you cover your fixed cost, we are a service provider company. So once you start covering your fixed cost, the profit margin goes abnormally high.
Understood. And sir, our receivables look quite high. It seems we have a credit period of around 6 months. So is that understanding correct?
See, there are few sectors where the payment takes time. But yeah, most of the private clients we have, as I said, that more than two-thirds of our order book now consists of private clients, where the payment is being given at a much faster rate as compared to the government clients. So it should improve, and moreover, more so the debtor period which is there also includes retention money. So that's why it looks higher, but in real terms it is not that high, the debtor period.
Understood, sir. And lastly, sir, what is the total capex we need to incur on our coal block and in the Oman joint venture, and any other capex that you might be looking at? And are we looking at expanding our rig count from the current 40? And so if you could just explain how all these capex.
Yeah, coming to the rigs, as we speak, we have almost 4 rigs under order, which should be delivered to us in the next 3 to 6 months' time. So it's an ever-growing thing. We keep on ordering rigs from time to time. The exploration sector is doing well right now. As far as coal block is concerned, total capex would be around 400 crores, which is in 2 phases. In first phase, it would be 200 crores. In second phase, it would be another 200 crores. As far as Oman operations are concerned, we are committed to spend like our share of investment. Since it's a joint venture company, our share of investment would be anywhere between 15 to 20 crores over the period of next 3 to 5 years.
Understood, sir. And this rig, sir, we are buying from this Apollo Techno or Revati equipment, or we are importing it from foreign companies?
No. These are mixed. We're not buying from these companies. It's a mix, some imported rigs and some local domestic rigs, depending on the capacity and usage.
Understood, sir. And for these 4 rigs, what's the capex you mentioned?
It's all like ranges, depending on the size and capacity of the rig.
Okay, understood, sir. Thank you very much. I'll join the question queue.
Thank you. Participants with questions may enter star and 1. The next question is from the line of Dhruv Ravani from PriceBridge PMS. Please go ahead.
Hello, sir. Just one question on so you mentioned about the 40% growth in revenues. So our order book has grown from 321 crores to we are currently at 581 crores or so for this year. So what is your internal target for FY27 end in terms of order booking? Any visibility that you can provide?
Currently, we have participated in tenders worth more than 500 to 700 crores. We should be getting more orders in next 1 to 2 months. So as and when we keep on adding our order book, we will be updating the market.
Okay. Another thing is, if we look at our total order book size, aquifer mapping has a reasonable share this particular year, which will go into execution in FY27 is what I assume. So that would be accretive to the margins, you believe, further?
Can you repeat the question again?
So, if you look at the total order book size, this year the aquifer mapping has a good order book as of FY26 end. So, do you feel their EBITDA margins can go up further from here because of that share of change in mix of the order book, specifically because of aquifer mapping?
Aquifer mapping order we got in financial year 24-25, and we have covered quite a bit. In fact, we have almost executed more than half of the orders. So it gives us good margin, and currently, and as I know from the market or from our clients, that there would be fresh tenders also coming in this segment in which we shall be participating.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, on the HZL Hindustan Zinc order, have we started executing or we expect in coming time?
In the next 2 weeks, we shall start the order, executing the order.
Sorry, sir, you were not clear.
I said in the next 2 weeks, we should start executing the order.
Okay, sir. And you said, as in, can we expect like 70-75 crore per year, or like first year could be more or less, sir?
See, as I said during my first question and answer session, that the time given by the client is 4 years, and till now our history has been that we have always achieved the target much before the timeline given by the client. So in this case also we shall try to do it as early as possible. So if you talk about the contract, it is 75 crores a year because divide 300 crores by 75, but we shall try to do it as early as possible.
Sure, sir. Thank you and all the best.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
So if you could just explain to your layman investors that what is the kind of competitive scenario in this industry. Now, I understand in 2D, 3D seismic survey, this Alpha Geo and Asian Energy are the competitors. And sir, so in drilling side of the business, who is our major competitor?
See, it all depends on the, like we are into multiple domains of exploration of natural resources, and everywhere within those domains there are different players depending on the size and the depth, and the kind of requirement the client has. So, it is very difficult to come out with the answer as to what all competitors, because that would take almost a day to explain you each and every competition in each and every segment. But, just to cut it short, we may have 2 or 3 competitors everywhere, depending on the segment, depending on the contract we are fighting in for.
Mr. Garg, do you have any more questions?
Yes, of course. So you mentioned the 400 crore capex in the coal mine. So how are we going to raise those funds? Any plans to raise equity or debt?
As I said, that it would be in 2 phases. So, the second phase would come out from the revenue and profits of the first phase only. So roughly the initial investment would be around 200 crores. And even in that 200 crores, most of it would be in the non-fund base, means giving guarantees and securities to the government. So, so the initial investment in cash would more or less come from the internal profits which we make, the banks and the offtake agreements which we enter into with the potential clients.
Understood. And sir, any idea about what the cost of production will be or the break-even price of coal below which this mine will make losses?
See, we do our projections on coal index price. So the coal index price for this particular grade currently hovers around 3,100 rupees per ton. Although the market price is much high right now, but we work on the coal index price right now, and based on the coal index price and the cost, we shall be able to have 40 to 45% IRR coming out of the coal operations.
Yeah, EBITDA will be around 46%.
Understood, sir. And sir, so you mentioned that what I understood that with 200 crore fund and non-fund based investment, which we'll fund through internal accrual, the phase 1 of the mining can start.
Yes.
Understood, sir. Thank you very much.
I have said internal accruals, offtake agreements from the potential clients, and banks.
Understood. And sir, what are the volumes,
sir,
expected volumes in phase 1?
Thank you, Mr. Garg.
Yeah, sure.
Thank you so much. The next question is from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Yeah, namaskar, Jain Saab. Hope I'm audible.
Yeah, audible, Saket.
Yeah. Sir, when we look at our number on a sequential basis, firstly, sir, are December and March quarters comparable, or any seasonality aspect that kicks into it, or what? How should one read when a comparison is drawn between sequential numbers?
See, Saket ji, हम लोग ना service industry में हैं, and service industry is very, very different from manufacturing industry. So यहाँ पे, quarter to quarter growth and quarter to quarter analysis is not, I believe, this is my personal belief, that this is not practical. But definitely, there are so many factors which leads to a high growth in a particular quarter or a low growth in a particular quarter. We move from contract to contract. The asset demobilizes from one location and it goes to, it mobilizes to the second location. So we as a company, we try to minimize the mobilization and the demobilization time. So definitely there is, as far as the quarter is concerned, this is my take. And normally third and fourth quarters are the better quarters in any financial year. Monsoon, last year monsoon quarter was one of the best quarters because the rigs were deployed in locations where, rain was not affecting the operation. This year also it is going to be the same, most for keeping our fingers crossed. We have contracts to be executed in areas where, the rain will not be affecting the operations. So all in all, FY27 we should be able to deliver good results.
Okay, so because you have highlighted in the business update that the point is mentioned that the present order book contains order which you just mentioned that which will entail company to run operations smoothly even in rainy season, mitigating the risk of revenue loss during monsoon. That is what you are trying to explain. So, yes, sir. Hello? Yes, sir. Sir, the second point which I'm trying to understand is about the opportunity of this coal bed methane business part, sir. When we look at your presentation, the CPM production and the aquifer mapping had the highest share at CPM production having 37% and aquifer at 5%. So currently, I think so with this intake of large order from Hindustan Zinc subsidiary, things have changed materially. So how will this CPM vertical going to contribute going ahead in terms of the revenue visibility and also and the bid pipeline?
CBM should well be on course to deliver similar to better results this financial year. Exploration industry should grow well, and along with CBM, there is also a government impetus on underground coal gasification, and we should get phenomenal results from this sector as well in this financial year.
Sir, didn't get you, sir. Coal gasification, can you come again?
Underground coal gasification is a new domain in the exploration segment, which has recently been launched by the Government of India. So we should get phenomenal results from this sector as well in the coming years and this year as well.
Okay, so as of now, sir, we do not have anything on the order book. Firstly, the government needs to come up with the plan. Yeah.
I don't have anything on UCG underground coal because right now, but we are talking to different clients on this subject.
Right, sir. And one small point, and I'll join the queue. Sir, in the when we look at our closing balances for property plant, that has gone up significantly from 62.5 crore to closer to 90 crore. And looking at the cash flow, we have invested around 43 crore rupees for the current year. So, if you could just give us some understanding in terms of in terms of the assets that we have added with this investment.
See, we have added multiple rigs in this financial year. We have also bought a warehouse for our store in central India, and this is why the investment in properties and assets have gone up from 61 odd crores to 90 odd crores.
Mainly it represents, let me come in, mainly it represents the capex we have incurred for second phase of the land project.
Okay, sir. Sir, so, Saab, how much has been the Reliance contribution for the last quarter or for the last financial year, and how is this going to ramp up for the current financial year?
You are talking about
both the CBM rigs are currently deployed with Reliance, and we expect the same scenario this year as well, and we have ordered for one more rig which should be delivered to us sometime in the month of September, October.
Sir, I didn't get you completely. Can you repeat once again, sir?
I said currently two of our rigs are deployed with Reliance. We have also ordered for one more rig, and it should be delivered to us in the month of September, October this financial year. So we shall have 3 operating rigs within in this financial year.
Okay. So I was looking at the revenue number, sir. How much have the Reliance portfolio contributed for the last quarter, and if you could just give the yearly contribution, and how will this ramp up?
It's about 35% of our total revenue.
Okay, and this will move up to?
I'm sorry, sir, could you return to the question?
Yes, ma'am. I will join the queue, ma'am. Only sir is answering me, and that is what I'm...
It should remain somewhat same to a little bit higher, 35 to 40% this financial year, you can say.
Okay, on an improved revenue. That is what you are...
Yeah.
Yeah. Sir, I am joining the queue again, sir.
Thank you. The next question is from the line of Rahul Gupta from Neve Advisory. Please go ahead.
Yes, good afternoon, sir.
Good afternoon.
Sir, my first question is regarding the Jharkhand coal block, where you are waiting on the PL-cum-ML application, which is pending with the government. So, I wanted to know the status about it.
No, as I said, now we are NABERS certified agency, so we don't need a PL. We don't need PL anymore because we are already notified now. And once we were notified in the month of November, after the notification, we started our exploration program in the state of Jharkhand. We are on the verge of completing the exploration part. Once that is done, we shall be initiating the preparation of GR and then mining plan. So that part is done and over.
Okay, sir. Thank you. And the second question that I have is regarding the Reliance contract. Sir, are you expecting the contract to extend for 3 more 6 months extensions?
Yes.
Okay, sir. Thank you.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
So, what kind of debt we are looking at to close FY27?
We should be closing at the lowest level of debt this year.
Okay, so basically the debt should reduce from the current level of roughly 80 crores?
Yes.
No, but I mean, despite funding the 100 crore or 200 crore coal capex?
That is not required in this financial year. After the approval of the mining plan, it should take about 2 years' time to start the production. So, so the funding will not be required this year except for a small bank guarantee which will be given to the central government once the mining plan is approved. So that too will be coming in as non-fund based coming from banks.
Understood, sir. Sir, so this coal bed methane, which is contributing 37% of our revenue, how is this expected to, going ahead, is it expected to increase in our mix or reduce or stay at the current level? And how long is this block with us? What's the life of this block?
As I told, that currently both our rigs are currently deployed with Reliance, and the third rig is under manufacturing, which will be delivered to us in the month of September. So revenue should increase from this segment in this financial year.
Okay, so basically this coal bed methane production we are not doing. Our rigs are basically in that sector, are deployed in that sector.
Yeah, we are instrumental in, like, our assets are deployed and the client is producing coal bed methane.
Understood. So the coal bed methane block is not ours. We are not the owner. Okay, we are just service provider
to our clients.
Understood, sir. Thank you very much.
Thank you. The next question is from the line of Dhruv Ravani from Prince Bridge PMS. Please go ahead.
Hello, sir. Recently, there were a lot of CDM blocks which were awarded, a couple of them to Reliance and a few of them to other parties. You feel, apart from Reliance, you would be able to get orders from other parties also?
That is why we are also ordering more rigs in this particular segment. So we are talking to multiple clients as far as CDM is concerned. And also UCG would require similar assets, underground coal gasification. So we expect the fleet in this domain to increase in the coming future.
Okay. So just trying to understand, there were a couple of global companies which were there who have apparently won the tender. You believe they can get their own technology, or they would have to contact domestic players only for executing it on the ground? How do you feel this will work out?
These all are international bidding. So, but and like they are free to participate. But as far as CBN exploration and drilling is concerned, we are the market leader right now.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, if you have any questions at this time, you may enter star and 1 on your handsets. The next question is from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Yes, sir. So in continuation to the opening remarks, you mentioned about revenue growth of 40% for the current financial year, sir. I want to get my numbers corrected.
20%.
Revenue growth of 20%.
Yeah, but I also said, Kapoor sir, that with a growth of 20%, there is a significant increase in the bottom line.
Okay. So since you mentioned in the business update part that now there will be more linearity in the quarterly revenue, just to have a better understanding of how the business works. So we can take this quarter revenue as a benchmark for the existing quarters also, or there will be vagaries in the reporting as has been earlier also the case?
No, if you mean to say about the first quarter?
First quarter, yes, sir. Just to understand and model it out, how the profile will look like going ahead for the current financial year.
The operations are continuing. We are adding number of rigs. Large contracts are coming in. So definitely there should be substantial growth this financial year as well.
Okay. Sir, just my point was that in many companies we have seen that between H1 and H2, the revenue split is, say, 55, 45, 60, 40. So that was my sense of understanding of...
Generally, Q3 and Q4 are the best, is the best, half yearly. But, we can say that in this financial year, there would be continuity in the growth across all quarters because we have enough work orders in hand. plus enough to cater in monsoon season as well. We expect the rigs to be working well and deployed in the monsoon season as well. So we should have an all-around growth this year also.
Okay. Sir, in the business update part, you did alluded to the fact that we have done a strategic investment in the Australian limited company, having interest mainly in the Oman and the Middle East countries. So can you explain the synergies and bataiye, sir?
See, as I said that we have 2 joint ventures in Oman, and those that Australian company whereby we had made a strategic investment in Australia are also our joint venture partners. So that will strengthen our relationship even better with the company, with the joint venture partners in Oman.
Okay, so this is the same company. I think
I'm sorry, sir, could you repeat?
Madam, just to conclude. Yes, ma'am. I'm just concluding, ma'am, and I'll join the team. Sir, in one of the earlier company update which you did with the Velorum team, you did mention about yourself being a director in one of the Australian JP.
I'm also the director in the Australian company.
Yes, sir. Okay. Sir, I will join the queue for my closing question. Thank you.
Sure. Thank you. We have the next question from the line of Rahul Gupta, Neve Advisory. Please go ahead.
Yes, sir. Sir, actually, I wanted to, about the mining auction problem that the Indian companies are facing. The total blocks auctioned have been around 594, but the amount of non-operational blocks is around 512. So, can you give a guidance on what is changing right now and how fast will the execution will be?
See, the coal block commercial, first of all, it is not 594. If you talk about specifically coal block, it is around 200 coal blocks. You may be talking about other minerals. So right now, let's focus on the coal block only. So it's about approximately 200. And the auction started somewhere in 2020, the commercial coal block auction by the Government of India. And, generally there is a lead time of 5 to 6 years, 7 years on an average for the coal blocks to start. So right now you may see a low number, but the government is, since we are on the, we are one of the coal block owners, so we see the kind of follow-ups being done by the central government, the Ministry of Coal. It is very aggressive, and we shall see a phenomenal increase in numbers of operating coal blocks in the near future.
Okay, sir. Thank you.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
So if you could give us some idea that how many total rigs are operating in the country, like we are having 40 rigs, how much would be the total in the country?
So anywhere between 125 to 150 rigs are operating, hydraulic rigs.
Okay, understood. And sir, so what is the occupancy of these 40 rigs that we have? Are all of them currently deployed, or some of them are undeployed?
No, more than 100%. In fact, some of them are also working under us as subcontractors, almost more than 10 rigs.
Okay. And sir, what is what's the rate of these rigs? Like, how is it determined, on a per day basis or per month basis or hourly basis?
The rigs deployed in the mineral exploration sector is on per meter basis.
Per meter?
Yeah.
Okay, so the more you dig, the more you pay.
The rig in the oil and gas gives you day rates.
Understood, sir. And sir, like our fixed asset base increased significantly from 67 to 115 crore last year. So this is on due to the increase in the fleet count?
Yes, we have increased almost 7 to 8 rigs in the last financial year.
Okay, understood. So now, do the rates keep on going up or down, or these are stable rates like you told us on a per meter basis?
Yeah, I said earlier also, currently exploration sector is in demand right now, so there is a huge shortage of resources. So we are seeing a good increase in the rates given by the customers.
Understood, sir. Thank you very much.
Thank you. The next question is from the line of Utsav Baheti, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yeah.
Yes, sir.
Yeah. Congratulations for the great set of numbers. I have a few questions. You had briefly mentioned in your presentation that we are entering into a super cycle. So, can you just touch upon that? What is the scenario like, and how might we benefit from that?
There has been, what we can see since the Ukraine-Russia war, globally, countries are trying to become self-reliant, and with the recent Iran-Israel-US war, the geopolitical tensions and the crisis in the crude oil and other mineral sector and the need for critical mineral and rare earth sector, we can see that government is putting a lot of emphasis on the natural discovery of natural resources what we are having within our country. Our country is very good, and we have huge natural resources, be it mineral, be it oil and gas, be it critical mineral. We have a huge shale gas deposit. So government is giving a lot of incentives, and the policy is directed towards more exploration in these sectors, so that these resources could be undercover and can be taken out of beneath the ground. And and this can be seen last 1 or 2 years of our operations also, that all our domains are cohesively running well as a well-oiled unit, and we expect the same to continue over the next 3 to 5 years.
Okay, sir. Thank you. And there's one more question, sir. So, like you said that there will be a substantial amount of coal blocks which will be, starting. So, will that kind of open up a new stream for us, kind of a revenue stream? Apart from the coal block that we have.
So, as I said, we are working on the geological report, and then we'll be working on the mining plan. So once we have these data approved, then we shall be able to know how much we will be able to produce per annum and how much revenue we shall be getting in from our coal mining business.
No, sir. I was asking that just keeping our coal mining, our operations apart, there will be a lot of coal blocks that will be active. So, will that generate any revenue for us? Will that open?
Yeah. See, the demand for coal production will keep on growing. Currently we are sitting at about 1 billion ton per annum, and by 2030 we are expecting production of 1.4 billion ton of coal, and so will the demand for power increase. So coal is not going anywhere now.
Okay, sir. And that will be all, sir. Thank you.
Thank you. Participants with questions may enter star and 1 on the handsets. The next question is from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Yes, sir. Sir, as we look at our presentation, slide number 17, the projects and the order book details, we could see that there are 19 projects that are ongoing, and in the order book also it is the CBM and the Aqua mapping that are more operational, will be contributing to the revenue pie for the current year. Is that understanding correct?
Yes.
Okay. And sir, when we look at this aquasphere mapping part of the story, sir, what is the opportunity that we have currently, and how is the bid pipeline currently shaping up for the same?
So this is one of the most important strategic projects for the Ministry of Jal Shakti, Government of India. As we all know that, the quality and the quantity of water is depleted groundwater. That is the reason why the government came out with the aquifer mapping project. So the idea is to drill a water well, put the casing in, and install DWLR. That's the digital water level recorder. The government from time to time, to be precise, Central Groundwater Board from time to time, they draw out samples, they analyze the quality and the quantity of water. So it's a very important project, and the scope and the size of the project will be increasing in coming years, and we shall be getting more opportunities to participate in new tenders in new states and increase the volume in this segment as well.
In terms of the capex that we have done, what kind of...
Could you return to the question, please?
Only what sir has replied.
There is no capex in this.
Okay. I'll join again, sir, maybe.
Thank you. The next question is from the line of Keshav Garg, counter-cyclical PMS. Please go ahead.
So I'm trying to understand that these rigs, drilling rigs, is it a one-time affair or is it a consumable kind of a item? For a coal mine, is it?
Drilling is a one-time affair. Drilling rig is a one-time affair.
Okay.
When we do drilling, we use rods and bits. These are consumables.
Okay. So basically, so let's say for the coal bed methane, we just drill once and then the gas keeps on coming out till the life of the well is there. Is that understanding correct?
Yeah. So the drilling rig goes there, drill the well as per the instructions given by the client, and then once the gas starts or once the client is satisfied, the rig moves from one location to the other location.
And sir, are these rigs fungible, like the same rig that can be used in coal bed methane can be used in coal, can be used in aquafire, can be used in any other copper or any underground mineral?
No. Different rigs are for different purposes.
Okay, understood. And sir, and what about onshore oil and gas? These rigs are...
CBM rig can do onshore oil and gas as well.
Okay. But CBM rig cannot do, let's say, copper or something else?
No.
Okay. Understood, sir. Thank you very much.
Thank you. The next question is from the line of Rahul Gupta from Neve Advisory. Please go ahead.
Sir, as you mentioned previously that the government is becoming aggressive and opening new blocks. So what kind of demand are we expecting? Are we expecting to get more tenders from the government in any kind of mineral segment?
Government is auctioning the blocks, and definitely the new LRT would require more drilling to be done in the block to assess the resources. So yeah, definitely more is in the way.
Okay, sir. Thank you.
Thank you. I now hand the conference over to the management from Southwest Pinnacle Exploration Limited for closing comments.
So thank you all for participating in this earnings Concall. I hope we were able to answer all your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Valorum Advisors. Thank you so much.
Thank you very much, everyone. On behalf of Southwest Pinnacle Exploration Limited, that concludes this conference call. Thank you all for joining us, and you may now disconnect your lines. Thank you.
Thank you.
Thank you.